Hi, and welcome to today's show where we talk all things apartments. And today I'll be talking a little bit more about investing and a little bit beyond apartments. But before I get started, this show is not legal or financial advice. It's simply sharing what we do and hopefully can provide some help and insight for others to become better at investing for themselves and preparing your future for you and your family. At least that's the goal, and that's what we're doing here. So our topic today is how to reach your first $100,000 in investing. So let's take a look at that. Let's take a look at two things. First of all, how do we make more money? How do we create more money to invest? And then how do we create more money in investing? And so let's take a look at that. I'll tell you a few things that I've done and that I'm doing, and hopefully it will give you some insight into what you can do and to hopefully increase your investing education. I spend a lot of my time educating myself on financial literacy and business in general. So I read and listen to approximately one book a week. And so approximately 50 books a year. And some of these I'll read or listen to over again. So it might be one book I listen to 4 times that year. But I do get through a lot of books, and that helps for life, mindset, the biggest thing, I think, and then investing knowledge, preparing me for the future, for my family, and for those that I work with, those around me. And that's the purpose of this channel, is to provide education and knowledge and entertainment while we do it. So let's take a look at some things here. I mentioned, or I wrote down 7 tips for getting your first 100K, and a lot of us are way past that. But let's start with the basics, and it can help us. Even if we're making more than that, it can help us go back to the basics and help us think about how we can create more equity, how we can create more value, how we can create more money to invest, for example. And so number 1, figure out how much money you can save each month. And I'll tell you a little thing about that. I have some accounts, we'll just call them savings accounts, that I set up, some more recent, some years ago. And for example, years ago, I set up an account, like a savings account, and then it's an external account, meaning it's at a different bank than my personal checking account, savings account, right? And so I can go in on my personal account and set up auto deposit or auto pay to this other account at this other institution. And so just a little overview of that. It pays a little bit of money every month, and that account is over there building up. Over the years, it's built up to a larger amount than you would think for the small amount every month. And for example, I just started out at $20 a month, and just this small amount that it wouldn't affect one way or the other if I saved it, kept it, or moved it out of my savings or family account, my personal checking account, in other words, right? And so consistency does more than large inconsistent moves, right? So if we can do something consistently, it will create larger rewards than some random larger moves. Sometimes, of course, there's a limit to that too, but basically being consistent will get you more typically. And number two is automate your savings. And that's what I was talking a little bit about already. Consistently automating our savings. And I like to get my savings out of the banking institution where I have my operating account or my family account or my spending account, in other words. And number three is maximize your employer-sponsored savings or investment account. In other words, if you're working for an employer that will match your savings or your account, like maybe a retirement account or something, then I have some friends that have maximized that, and then years later it grows to this larger amount. And number four is save your tax refunds and work bonuses. Sure, it's fun to spend that, right? We have a tax refund or we have bonuses coming in. So there's a law that we increase to the capacity, right? We increase our spending to match our income. That's our human nature. But if we can decide what we're comfortable living with and spending, even when our income increases, that can really make a difference. Number five, pay off existing debt. For example, credit card debt. There's a lot of interest that goes into that we could be saving. That was a big one. And number six is seek increase in income. In other words, a pay raise if you have a W-2 job, or a side hustle if there's something that you would like to do that would fulfill you along while you're doing your job, that a large percent of the people in the country hate their job. And so if that happens to be you and you hate your job, you can look at something that you would love doing. Maybe you're an accountant and you would love to be an artist, for example. Maybe try painting, doing some artwork, right? And maybe you could sell it, or maybe it would become valuable, whatever that side hustle is, or that personal interest of yours. Always looking at providing value to people and looking at what's available and what's a demand, right, for your service. And number seven is to stay committed to your goal. I could have came up with a better one for number seven, couldn't I? But no, stay committed with your goal. Now let's take a look at your first $100,000 in investing. And I'll tell you some amazing things that happened to me when I was, first starting into investing, and I'll say my first investing was in a business. I built a business, sold it. I moved to Texas, near Dallas, built a manufacturing company, got bought out of that. And but during that time, I was investing just about all of what I made back into the business, which is okay, which is great. People do that and get ahead faster by doing that. But then along the way, I was thinking, what happens if something happens to the business, or maybe I couldn't run it, or maybe it failed, or something else. If I lost that income that I was continuously investing back into, so I was thinking, wait, I need an emergency fund, a little bit of money that would get me by for a few months instead of investing all of it back into the business. And so I started doing that, and a savings account, and it started building up. And then I started investing that money. And I started investing I did some mutual funds, and I started in stocks, did a little bit of day trading or swing trading, not much because I was so busy in the business, but I did some, made a lot of money trading, and then in crypto. And I made a lot in crypto as well. And so Bitcoin, Dogecoin, and some of the top ones. I don't recommend investing in all of the thousands of cryptos out there, but in the top 10, you can Google search it, the top 10. And here's just a personal opinion of mine. I think we're at the start of another upswing or a bull run. Personal opinion, do not take my advice if you're not sure about it, and if you didn't do your own research. So please go out there and do your own research in every investment you make before you make it, right? Just to understand how that asset works, because crypto is volatile. It goes up and down more than some people like, right? And I could have, and I'm learning too, I could have pulled more out when it was at its peak a few years ago, right? In one account, they had like 20 grand turned into like a couple $100,000, right? Within a couple week period, right there on this spike of Dogecoin. And let's take a look at some other ways you can build your first $100,000 in investing. So we can make money by generating money by working, right? Or doing a service, or providing a valuable service or product. And we can gain money by investing in profitable investments. And maybe we invest with someone else, with some friends or someone else in an investment, or maybe we go do it ourselves, like buying real estate, putting some money into that and letting it build up and letting it cash flow, or whatever your case may be. So, and that's the way I did, as I was speaking. You can, if you don't have large amounts, because some of our apartment investments are large minimums, larger, like 50,000, 100,000 minimum on some of the deals. And so I'm speaking to smaller amounts, right? If you have smaller amounts of money, do something valuable with that money. And you can have small amounts of money you can invest into assets, into things. stocks, crypto, whatever you feel like you could invest in. Maybe you buy a small property and maybe you improve it and then sell it, or keep it and buy some more. And then I know I have some friends that build up multiple single family properties and then they sold all of those. They had like, it was maybe 14 properties, single family homes, and they sold all of those and moved it over into apartments. And so you can grow different methods, grow your wealth, grow your money until you can get into the sometimes larger deals, sometimes better deals, right? And so I like to keep some in long term and then some in shorter term, higher risk, right? Higher rewards, right? And so that's about wraps it up for today. Other than I just wanted to put my phone number and email out there. Please follow up on this, the Facebook group and Eagle City Multifamily on Facebook, and also Eagle City Multifamily on YouTube, the YouTube channel that these recordings are uploaded to. Hopefully it's helpful to some of you, and please feel free to reach out to me, message me through the YouTube channel or through my website. We have a website at eaglecitymultifamily.com. You can search that and get in contact with me or anyone on our team. My phone number is 903-951-7552. And my email is herb@ecmultifamily.com. And my first name, Herb, is HERB at EC Multifamily. And the E and the C stand for Eagle City Multifamily. So Herb at EagleCityECMultifamily.com. And send me an email, give me a call or text on the phone number 903-951-7552. And we'll see you next week.